Hello, everyone. Welcome back to How to Trade in the Switch Markets community. I'm Shane Vernier, head trading coach over at howtotrade.com. And if you're joining us on Switch, I think you came to the right place. We're going to give you some absolutely great insights into what to look for in today's FOMC Minutes, which drop in about an hour. It's been sort of a whipsaw day. I mean, we're going to talk a little bit about some of what's happened in the stock market. This was not a day that you should have been trading opening range breakouts. I'm going to show you why. The reason is reversals. Anytime you're in an FOMC meeting or an FOMC minutes release or there's a big release, you got to really be careful with trying to play breakouts, at least early in the day for true day trades. And a lot of times those opening range breakout trades, those are true day trades. And what happens is the market reverses itself ahead of the news or on the news. So you got to be very careful with that. We also have a winning trade that came across the board for us in the New Zealand dollar. I love the Kiwi. The Kiwi is one of my favorites. It seems like every time we get a shot to hit the Kiwi, we hit it pretty good. This one was a fantastic Fibonacci retracement back into the golden zone on the weekly chart. I'm going to start out with that. Also, our key levels in the US 30, we've got to know where those are, and then we've got to break down the Euro USD because the Euro USD has a key level in play that has been absolutely money in the bank for about the past several days. I want to show you this. This is something I probably should have been harping on earlier in the week, but that's okay. Better late than never, and we're definitely watching that key level very, very closely. Also, Swiss francs on the move, very bearish, broke beneath that 80 handle. A lot going on in the Swissy as well. So I want to welcome everybody. A lot of new names, a lot of old faces here. The big thing that I want to stress is I'm not sure that the link we sent out in the emailer is working, but I know there's a lot of folks watching right now, so that's fantastic. Clement, good to see you. Sean, Peter, good to see you, Peter. Dave F19, all right, Dave F19's in the house. Lita, always a pleasure. Lita, Bobby, Bob, good to see you, Bobby, and as always, good to see you, Tuku. All right, guys, let's go ahead and get started here. Welcome to the Switch Markets community. Remember, if you do need a broker and you want to bring your ambition into focus via the markets, via active trading, you're going to go ahead and check out switchmarkets.com. They've got all the markets you need. They've got zero commission accounts. You can fund in just a few minutes, 1 to 1,000 leverage, 0 pip spreads on some things. It's got you covered if you're interested in going to work in the markets and trading via MT4, MT5, and now TradingView via the Pine Connector platform. Doing a lot of work with Pine Connector right now. Should be a lot of fun. Good to see you, Matthew. Welcome, John. Good to see you. All right, a lot of folks saying hello. Okay, guys, let's go ahead and get to it. This is our trade follow-up, our New Zealand dollar USD. Now, these trade ideas, these are actionable trade ideas. I typically put out 1 a day, up to 5 a week. Typically, I put out 3 or 4 good trade ideas. This one's pretty good. We put this one out, a few days back, and we had a fantastic level come into play right there in the New Zealand dollar. The back end of this golden zone, you take a look. We were looking to buy right down here at the back end of this golden zone, and it turned out very well. You can see right here. Here's your MT5 platform. We had a nice big sell-off, nice weekly chart. We went right down and kissed that 62% level. Our entry point was right on the 3/4 handle. If it doesn't sound like, or if you don't know what a 3/4 handle is, basically I trade in terms of quarters. I think in terms of quarters. So a flat number, 25, 50, 75, and the next big round number. And right there, we were right around that 59.73. And what happened was, depending on your broker, if you were at Switch, you got this trade and it paid you off. Some of the other brokers, like Awanda, only printed a 76. This one, we came right down and printed a nice test of the back end of the golden zone. That right there is why I love Fibonacci numbers. That's a beautiful trade and one that we really like to see develop, especially for our clientele. That was a good one. I think that we're in for a couple more good ones here, and I'm going to go ahead and see if I can find you one right now. This is another trade idea that we put out, the US 30, 45,000's back in view for the US 30. And I mean, it's an interesting level. It really is an interesting level because it's a big round number. We sort of missed our entry a few days back, I believe on the 3rd of July, right before the 4th of July weekend. We were looking to sell right up there in front of 45,000 and get that big rotation down. Boy, it was a pretty good trade. We just didn't quite get our entry. I was looking for like a 44,950, 44,975. We only got about a 44,881. Now I'm interested again. I think this FOMC minutes, if it's dovish, potentially we could see a test of that level. There's a lot going on in the world right now. There's a lot going on in the markets. We're for sure going to be watching the US 30 though, because a big Monday loss of about 0.5%, and since then we've traded inside of Monday's range. The market doesn't know where to go or what to do, and a lot of that has to do with what? Our monetary policy. Monetary policy is everything. When we're talking about risk assets, we need cheap money in order for those markets to grow. If they don't get the cheap money, then they won't grow, and that's what the FOMC Minutes today is all about. So let me see. April, good to see you. April, welcome. If you guys have any questions at all, be sure to ask. I know I move pretty fast sometimes. I'm from the United States here, up in the northern United States, so I have a tendency to move very fast. Those of you that have been watching me for a while know that I start getting on a roll and things go really quickly. I know if you're a beginning trader or maybe English is your second or third language, I understand I can be a little bit quick, but I'm a trader. I think fast, I act fast, and typically it pays us off pretty good towards the end of the week. So I feel good today. I think this FOMC Minutes release is going to be a big one, and it's one of those things that we definitely have to begin focusing on. So week 28, what do we have? Monday was the big, beautiful bill. RBNZ interest rate decision paid us off beautifully with that Kiwi trade. Wednesday, FOMC Minutes. That's the game today. Everybody's waiting on pins and needles. 55 minutes from right now, it's going to drop and hit the news wires. It's a hard one to trade. It's a hard one to trade. So I'm going to give you some keys and things that we need to look at and really break down what it means. Tomorrow's going to be initial jobless claims. Be sure to tune back in, same time, same bat channel. And we'll go ahead and cover the job situation and maybe some hot trades for late in the week. And then Friday's UK GDP, which typically doesn't do much, but right now everybody's wondering if we're going into a global recession. News of the day today, MBA 30-year mortgage interest rates came down a little bit. Mortgage applications way up. That means that we're sort of expecting to get to the end of this tightening cycle, meaning the long-term lenders are starting to bet that we're going to get a rate cut soon. Dave's Apple, good to see you. What up? Good, everything's good here, but that's what that means. Not a huge market mover, but definitely something I watch every Wednesday. And the crude oil inventories, I want to spend a minute on crude oil, and then we're going to dive into the Fed. Crude oil inventories came in. We got a big print today, 7 million barrel build week over week. That was well over what we thought with negative 1.7 million and well above the previous release. So we've got back-to-back solid builds. We're still in trouble, though, and the reason why we're still in trouble is because we are running very, very, very far behind our 5-year average. Typically, this would be a bullish market driver for WTI. The second part of what I'm going to tell you. The big print today is a bearish market driver. That means that, okay, we're building our supplies, but look where supplies are. If you're reading this petroleum status report, this EIA report, you remember, third paragraph is all we care about. This is the summary. Don't get caught up in the minutia. Keep it easy. Keep it easy. Listen, we're not economists. You're not an energy expert. I'm an energy expert. You don't have to be an expert to trade crude oil successfully. You don't. But you got to know what moves the markets. Every week, this moves the markets. Now, third paragraph is what we want. U.S. commercial crude oil inventories increased by 7.1 million barrels from the previous week at 426. U.S. crude inventories are 8% below the 5-year average. 8% below. That's terrible. That's been getting worse since Trump got into office. Now, we expected the exact reverse of that. We expected an absolute tremendous amount of oil production. We really thought that we were going to get back on track there relatively quickly. So why are we running such a deficit in oil? This is the last fundamental, and then we're going to move on because we're really making a lot of gasoline right now. We're burning a lot of gasoline. That means it's the summer months. It's right around the 4th of July holiday. Pretty much everybody's got their motorhome out, and they're doing business. They're driving around. They're burning gas. That's why your oil supplies are low. But I have to tell you right now, and hey, listen, one of the things about this stream, this isn't a political stream. This is an honest stream. Those oil inventories compared to the 5-year average have to start improving. They have to start improving here in the next 6 months. If you're not going into Christmas running about even with the 5-year average, or maybe even a little ahead of the 5-year average, then the oil production in the United States is nowhere near where it needs to be. Everybody knows that. Nobody's talking about it. Nobody's talking about it. Everybody's talking about the Epstein list. They're not talking about oil. This is a potentially dangerous situation with WTI crude. Let's have a look. Okay, here's your U.S. oil CFD. Here's the weekly. This is a situation that I really do think is a fantastic trading opportunity for us. And I'm going to go ahead and give you a level that I'm watching relatively closely. Check out this week that we got towards the end of June. Big time plunge, 12% plunge. 12% is no joke. Millions of dollars were lost right there. If you were long, millions of dollars were won if you were short. Now we're just trading inside. We're trading inside of that weekly range. For me, this is a no-brainer. It really is. This is a no-brainer. I'm going to go ahead and go spike high to a spike low. I want to see the Fibonacci retracements of that range. High right there, low right there. That week is huge. Now, what happened that week? Oil crashed. Why? Israel-Iran was over. And that wasn't over, but it definitely slowed down. That was after the U.S. bombing runs. So we came right up. Now oil's coming back. 68.98, pretty good level. 68.90 is what we've printed so far. I would be up there looking to sell really a short-term scalp. And let's go ahead and just put this trade on and see if we can't maybe get this thing going here. I want to go ahead and sell. I want to sell a limit order. As far as the units go, I'm not really too concerned about what we've got going there with with the U.S. oil CFD. I trade futures, but we'll go ahead. Let's go ahead and beef this up. Let's go for a 25 pip take profit. Let's go ahead and put that at a 25 pip stop loss. Now, what does this mean? It means that I want to sell right there. I want to sell right in front of our level. So 98. I want to go ahead and I want to sell. Let's just go ahead and sell 95s. So I'm going to go 68.95, and let's go ahead and beef this up a little bit. Let's go 30s. Let's go 30, see if we can get 30 pips on a pullback. So we're going to try to call the intraday top today. Sort of problematic this time of day with only about an hour 20 left. But I do believe that that's a pretty darn good play. So that's going to be our trade. That's going to be our scalp. That's what I like to do, trading WTI crude. I think that it's a pretty good way to look at the market. You take your macro levels and you really look to dive in and trade them. So right now we're trading about 68.80. If in fact we do get up there and make that trade at 68.95, I mean, we could even shade it down to 94. Let's do that. Let's put this one at 94 just for the sake of argument. I like trading evens. I don't like trading odds. So let's go there. Let me see, John, exactly. Watching on the XAO USD. Let me see. X-Lite, give us gold. What's up, coach? What can you say about the Euro USD? All right, guys. Let's get right into the market action. But before we do, right here this is the only thing we need to know about the FOMC minutes. Then I'm going to break down what it means here after we cover our key markets. How does the Fed impact the Forex? If they're dovish, you're going to see it's bearish for the USD. That means that they're thinking about cutting rates. They're thinking about devaluing the USD to kickstart economic growth or sustain economic growth. All right? Means the USD goes down, risk assets and commodities go up. Hawkish. If the Fed comes out and they say we're not going to cut interest rates, we're going to wait to cut interest rates, what does that mean exactly? It's bullish for the USD. That's going to send risk assets down. That's going to put downward pressure on your stock markets. On your commodities are not a risk asset, but they do react sort of negatively towards that US dollar. So when the US dollar goes up, hawkish Fed drives the dollar up, commodities are going to go down, or at least they're going to have a ceiling put on them. Why? Because as the dollar becomes more valuable, it takes more commodities to take those dollars out of your hands. Commodities become worth less as your dollars are worth more. It's that easy. It's not hard, guys. Not rocket science. Now, what we want to do is we want to put ourselves in positions to succeed here after this FOMC release. This is what we want. And I'm going to explain to you in a minute what our interest rate expectations are. And I'm going to show you an actual FOMC minutes release from May. And I'm going to show you why it takes a little bit for these things to influence the market. All right, so here we go. You're going right here. You got 116.85. That's going to be your key level in the Euro USD. There's absolutely no two ways about this. This is a beautiful wave. This is what I call absolutely beautiful trajectory. Spike low, spike high, pull back, and there's your money level, 116.85. There it is. I loved this zone. I thought this zone was one of those things that doesn't come around very often. Euro USD. I've got a 13-day EMA right there at 116.94. I've got 38% on the backside of that at 116.85. That's a big deal. That's a big deal. Absolutely love it. Absolutely love it. This thing has been absolute money right there. Bam, the 7th, Monday, money. Tuesday, money. Wednesday, we've already traded down there again. The lows 116.89. That's a heck of a break again. Going in to this FOMC minutes release, we have to be ready potentially for a breakout beneath that zone. But I'm telling you right now, 116.85, that's got to be the 10,000-pound elephant in the room. Don't ignore it. Don't ignore it. If you're holding shorts right now, you do what you feel you have to do according to your strategy. Be ready. Be ready for robust support right down there, right around 116.85 to 116.95. And if, in fact, you get an opportunity potentially to take that long, it's not a bad long. Now, here's the caveat. You know, as an analyst, you always have to think about, you know, it's like every trade has a decision tree. Okay, if this happens, then I do this. Or if this happens, then I do this. I will tell you for a fact that once this level goes, and it has been under fire, it has been under fire in a big, big way. Once this 116.85 goes, we're not just going down a little bit, we're going down a lot of bit. I personally don't see that happening. I don't see it happening, but it doesn't mean that it can't. Listen, there's a tremendous amount of retail longs dug in right here, right from this zone. The world's basically long. They've bid this level in the Euro USD. Once we trade maybe beneath yesterday's low, this spike low, we could see the kind of washout that takes us down to a 116.41, maybe even a 115.96. So if the market does get incredibly bearish here on a bit of a surge by the US dollar, that's where I'm hanging out. My golden zone. I love the back end of the golden zone. That's what paid us off of the New Zealand dollar that came across the board earlier. 115.96-ish. That's a good one. That's a good one for the Euro USD. So I would be very, very careful trading this. If I was short, I would be very careful. This is a long-term bullet. It's not a long-term. It's an intermediate-term bullish setup. I got to really watch what I say because I get talking fast and I lose a lot of people. But you'll see right there, that the weekly Fibonacci is going to look something more like this. That means there's a long way down at 115.36, but this right here is the one I really like. That's our daily Fibonacci, and our daily Fibbies are pretty good, pretty darn good, pretty darn accurate. I trade my dailies on the commodities markets fairly religiously. So be careful if you're holding longs here, or excuse me, if you're holding shorts, Euro USD, be aware that 116.85 to 95 is the real deal for downside support. I wouldn't mess around with it. I wouldn't bet the ranch that you're going to take that area out. That's for sure. Okay, what do you think? What do you think in news by really Imran? Yeah, I'm going to go ahead and talk about the news, the FOMC. Yeah, we're going to break that down in just a second. I want to cover gold though. X-Light says, give us gold. Give us gold. John Peblo, give us gold. All right, let's do some gold. I'm going to show. This is my own approach. This is how I trade gold. This is how I trade really everything, and that's my Fibonacci retracement sequences. I've been doing this for a long time, so I know I move fast, and I know that drawing Fibonacci's can be very difficult. If you need some help, come on into the How to Trade trading room. Reach out and ask me. I'll send you some videos. Also, we have the Fibonacci counterpunch, the strategy that I built years ago. That's still in our Elite Trader series over at How to Trade. A lot of folks liked it. A lot of folks didn't. It's okay. It's how I trade. You trade. There's that old saying, you do you, you do you. You trade however you want to trade. This right here, though, let's back up. Let's go really the view from 10,000 feet on gold. This is spot gold. There's a couple of things that I would say, and it's important. I covered this the other day, but we always need to organize our thoughts before we trade. Just because we did analytics yesterday and lined out everything doesn't mean that we're all on the same page today. A lot of times, I work through my key numbers every single day. A lot of times I'll just show up and I'll wipe off. Now, if I got my Fibonacci set at the beginning of the week and I want to work those levels, those are locked on my chart and they never move. But a lot of times on a daily time frame, or maybe if things get a little confusing, as soon as I'm confused, the first thing I do is I right click and I clear everything. I remove everything, not the indicators. That's my base, but all of my drawings, I wipe it clean and I want a clean canvas. Well, this is a clean canvas, monthly chart. Now, if you're trading gold right now, you're saying, Shane, come on, I'm trading intraday. I don't need this on a monthly. Yeah, you do. You need to know what's happening here. There's your flagpole. You guys all pretty much know, if you're a pattern trader, you know what I'm going to do right here. This is a bullish flag, guys. That's a bullish pennant. No joke. Right there, bang. Nice big run up, and now we're inside. We sort of traded above May. June traded above May's high, and now July is incredibly tight inside of June. This is a rotational market right now. Until we see a break, complete rotation, I will be honest with you, most of you guys are trend traders. I love that. I love that aggressiveness. I think that trend traders, I share a lot of their risk receptiveness, their risk appetite. That's what I wanted to say. I share your risk appetite if you're a trend trader. You want to get in, you want to hit a great trade location, and then pull in a ton of money. I love it. I'm in. I think that's a great way to trade. For me, the way that I do that is I look for rotational markets, and then I pile on the leverage. Now, my profit targets are going to be much smaller, much more conservative than you guys. I do a lot of tick scalping on gold futures, so I'm not really taking positions in the market. I think that if you are going to take a position, a long-term position in gold, given this chart formation, you probably want to be long. Matter of fact, I would want to be long. I wouldn't want to be short. However, if we do wash out, say we wash out beneath June's low, 31.31, maybe 31.35 down there, that's huge. Now, it's a couple $100 down there, but it's still worth being aware of. But that would be probably the buy of all buys, at least for 2025. There's going to be a lot of punters lined up to buy there. Now, what can we say about price action right now? Tight. God, it's tight. I mean, it's tight. So if I was looking at the gold, always know where 3,500 is. That's the high water mark. We talked about selling right in front of 3,500 months ago. That was a great trade. One of those trades that a lot of folks didn't. They're not even trading anymore this year. They made enough money on that trade for the year to where they're on vacation. They're in a sailboat somewhere, or they came up here to Dillon, Montana fishing. I've seen plenty of those guys rolling around. But as the kids say, they're balling. They're rolling around in these big rigs and boats and all sorts of stuff. So we're in here working. They're not. They sold 3,500. They're done. In any case, so what can you really say about the gold market right now? Well, daily. Let's go to our daily chart. It's a challenge. No two ways about it. This is a challenging environment. Nice big sell-off yesterday. Still wasn't a trend day. It looks big. That range looks big compared to what we've been seeing, but it wasn't that great. I traded it. I faded the trend twice. Had a great day trading. It wasn't a breakaway trend. What's happening today? We're up a little bit. Guys, this is rotation. This is complete rotation. Fibonacci retracements, you could do something like this. I don't know that I would. I really don't. Went right to 50%. If we do churn a little bit higher, maybe 33.21 is a pretty good sell. Right up there, 33.25. I would be playing the back edge of this golden zone. And the reason why is I love converging indicators. Absolutely love them. My 13-day EMA is no joke. That's the one I hang my hat on. And then my 62% level, love 62%. The back end of that golden zone. We've got a video on the How to Trade Com YouTube channel. Golden zone, the Fibonacci golden zone strategy. Get in there and check it out. Love the golden zone. It really is one of my favorites. I love trading 38% and 62%. 78%, not bad either. I ignore 50%, and today it cost me. I probably could have made some money there. In any case, this pullback zone right up here, 33.25. That's a great short. 33.21, maybe a little bit premature. Depends on how big of a kick we get out of these FOMC minutes. But that's how I would be trading gold. I wouldn't be buying yet. I would be looking to fade this range, this daily range. We're starting to get a little bit overextended, but look at our RSI, guys. Down here, I know my picture is covering up the actual indicator, but this down here is the RSI. It is just dead flat. I mean, that's a daily chart, and it's in the 50. It's right at 50. What does that tell us? It means the market's in complete rotation. We're not trending. We're going absolutely left to right on your radio dial, and I'm telling you right now, if you're going to play that kind of action, more than likely you need to have a rotational strategy. I cringe thinking of folks trying to play breakouts and get trends in this environment because you're going to get shredded. The market just flat out isn't moving. Now, maybe the minutes move it. I don't necessarily know. Just don't know. Let me see. Hashim. Well, it made you laugh, Hashim. Let me see. Matthew Eaton. What are the parameters, the bands you're using? Goal zone. Good to see a goal zone. My Bollinger Bands I modify. And the work, honestly, the work goes back to the 1980s. My uncle, my mentor, that these are all public domain indicators. So if you guys are watching out there from the 7 V-Bar Trading Group, you can't sue me for this. They're all public domain. Even all of the settings are public domain. So I don't want to get anything in the mail. I don't want to get harassed or anything. What I'm telling you guys is this. If you are trading these Bollinger Bands, the factory settings that they come with are perfectly fine. What I like to use is the Bollinger Band periodicity of 24. I use an EMA, they're exponential Bollinger Bands, and I base those on the mid and then also a standard deviation of 1.9. So that's what I do, and the reason why is it really streamlines the Bollingers and gives me a good look at price action as it's developing. A lot of folks that just use regular Bollinger Bands, not exponential, sometimes those lag a little bit. So those are the settings for that. Let me see. Callie Buckle. How can I have a conversation with you, Shane? I'm from South Africa. Well, I mean, the best thing you could do, Callie, is come on over to howtotrade.com. Sign up for a free account there. You're going to get all the trade ideas and everything. Send me a private message. I'll take a look at my schedule. We're not really, I'm kind of slammed, but we may be able to do something via private chat if, in fact, you have some questions you'd like to ask. And then potentially we may be able to line something up in the future, via Skype, or actually Skype's dead now, or via Google Meet or something like that. So just reach out, go to howtotrade.com, click on my picture, send me a message, and I'll get back to you, Callie. I answer all my private messages. I'm flattered anybody wants to message me, that's for sure. In any case, that's where that's at. So that's gold. As far as what we need to remember about the FOMC minutes now, and I'm going to come back. We're going to cover a couple more markets. If you guys want to list a few, that's great. I want to look at the dollar yen. I think that's absolutely important that we do that. And we also had a Great Britain pound USD 920 trade that we had the other day that we need to look at as well, that actually turned out to be a winner. And see, this is unfortunate. I wanted that run right there. I wanted that 68.83. We were right on the doorstep of grabbing that sell-off, and that would have been a fantastic trade in U.S. oil. But, quite frankly, we only have about an hour of the trading day left. That's not true for U.S. oil. I don't trade U.S. oil after 2:30 Eastern just because the market absolutely dries up and turns into just a frustrating mess. And I don't like frustrating. I like easy. I'm into happy, and I don't do sad. That's for sure. And if you're a trader and you put a few steaks in the freezer, you'll be happy too. Let's see right here, sir. I'm waiting for gold. Yeah, I mean, we just went on gold, Sean. I just showed you the gold market and exactly what to look at there. Buy FOMC gold. I don't know. All right, guys, this is the actual FOMC minutes from May 6th and 7th, and this was released late last month. Now, we're not going to go through it. I'm not going to read you this because there's no point. What you need to remember is this. This is a document. This is a significant document. And what this records is the dialogue between the committee members that were in that meeting and how exactly they're interpreting the economic data and what they believe the situation is regarding the U.S. economy. Interest rates, money supply, all of it. What do you notice? This is a significant document. I'm still cursoring down. This is long. Now, what happens is, typically, with the FOMC minutes, is you get into a situation where nobody really knows what's in it. It's like that big, beautiful bill. They drop it, and it takes a while for everybody to understand, or at least it takes a while for the media to get in tune with what they're going to report and how they're going to spin it. That's why the markets don't move like an FOMC release, like an interest rate decision. We know immediately what the interest rate is, and then we get the prepared statements, which are short, about 5 paragraphs. This is more of a novel. Now, what you've got here is you've got dialogue on everything. And what we're looking for, with the headlines that I want to see on CNBC or Bloomberg or Fox Business or whatever your news outlet is, I want to see dissent. I want to see an argument in there that there's a real riff in people that want to cut versus want to hold firm. That's what we want. We want to hear outspoken committee members. I believe that's the phrase, some committee members, more than a few committee members. Now, everything in this thing's broad. The central bankers speak and write in broad terms because they don't want to roil the markets. But what you have to do is you have to really dial in, and you have to say, listen, what is important? None of what they say is going to be important. 2% objective, maximum growth. We're in a good place. Anybody that's watched our FOMC lives, we're in a good place to combat inflation. No, they're not. Inflation's entrenched. It's way too high. They can't bring it down. That's the honest truth. No one else is going to tell you that, but that's the truth. They can't put the rabbit back in the hat after COVID. So when we look at a document like this, we have to say what is really important. None of this is important. Treasury yield curves, all that stuff. Forget all that. What's important is there a movement in that boardroom to begin slashing interest rates right now? Do some people in there, or maybe a majority, believe that the path that the Fed is on is inappropriate? Now, those things are going to be very subtle. And what's important is that the media picks those up and starts making those headlines. If they're in there and those become the headlines, then we start getting moves. Then we can start talking about our interest rate expectations and what exactly can happen in the future. All right, this was a key level that we highlighted repeatedly in the U.S. dollar Japanese yen. And I talked about it so much, I almost feel bad about pulling this chart up. But this has been a very, very good early July for trading. There's no two ways about it, at least for what I like to do. Right there, 38%, 147.10. We talked about 147 a lot right here in the Japanese yen. Even though you've got a bullish month of about 1.59%, it's still nothing's happened, guys. Nothing has happened. You still haven't got that big break that we keep waiting for the dollar to port on against the yen, and we're not sure if it's coming yet. So what we've got there is a fantastic zone, 147.10. If you missed that sell, I'm sorry. That was a layup. That was an easy one. Let's go down to our daily chart and see exactly what we've got going. That was just beautiful. That was beautiful there back on June. It was beautiful again earlier today. It doesn't get any better than that, guys. Our 38% is right there at 147.10. Your high is at 147.18, and now you're printing 146.31. It's a beautiful thing. It doesn't get any better than that. You've already banked. You took a negligible draw. You've already banked about 70 pips. That's fantastic stuff. That is what we want to do when we're trading. We don't want the market really to get too deep into our pockets, although sometimes we just have to throw down and say, this is my trade. That's the line in the sand. So watch 147.10 as these minutes pick up steam. You're not going to see the volatility probably for 10 or 15 minutes after they're released. It's going to take time for the markets to get a handle on what the narrative really is with those FOMC minutes. We'll know more tomorrow, but that's what I want everybody looking for. That's what you need to be looking for. Dissent, strife, anger. Are they talking about Jay Powell stepping down? Has that hit? It's not going to be in there, but maybe. Okay, so if I'm trading the Japanese yen and I want to scalp, let's say I want to put in a nice scalp here today, right there, a spike low, right up there to today's high. That pullback right there at 145.48, 145.50. Yeah, we could probably make a case to buy that. You say, Shane, you just told us to sell up there. I said, no, you could sell that topside resistance zone, but this area right here is incredibly important. between 147, about 147 flat, somewhere in there, and then right down here to 145.50. That's good stuff. We can sink our teeth into that 150 pip range. We could trade the top of it. We already traded the top of it beautifully. Now we can trade the bottom of it. And if we get an opportunity to trade the bottom of it, then we're in pretty good shape. I think if you get a chance to buy probably 145.50s, 52s, you're probably going to walk out of here a pretty happy person today. Does the FOMC minutes give us that chance? Yeah, you're only about, 70 pips away from that. I think it's completely possible. I would be watching that one closely in the yen. Let's see. Son Goku, good day, sir. Good day. Good to see you. T Marino, cool. Let me see. Hashim, do you use order flow? Well, I mean, yeah. The way that I use it's a little different. So let's say we were going to look at gold. Ignore this. These are August gold futures. This is the contract that I'm currently trading. I have a topside range number right up in here. It's right around 33.29ish, 28, somewhere in there. So if you look at the 30-minute signature here on gold, it's ugly. Right in here, I was relatively certain back right around the U.S. Open. I said, I'm going to get a great trade right there from my topside range number. Don't ask me what the range numbers are. I can't tell you. But this right here is really a good area that I was looking to attack, maybe right around that 330. I can tell you that, maybe right up around 33.30, somewhere in there. I was looking to attack that to the short. And the reason why is we're in complete rotation today. Don't get it twisted. This looks like a U.S. session uptrend. It's not. You had a nice big break right here for about 90 minutes, and you've been just grinding north. And the real question is where does this market stop at? It looks to me like you've sort of, you found a level right around 33.20, and now people are waiting for this FOMC maybe to move gold higher, maybe to move it lower. I really couldn't tell you what to expect, but when I'm looking at order flow and price action, this is what I'm watching. That's what I watch all day long. That's my trading DOM. I don't use TradingView. I use a different broker. I was actually going to execute this trade live for you, but it's not going to come into play for us, which is unfortunate, because we need to start executing some live trades with real money. But this right here is what I do. This is what I watch. There's a couple of things that I'm watching here. If I'm watching price action or order flow, excuse me, I'm looking number one's at the bids and the asks. Now a lot of people are going to buy level 2, and they're going to have the complete market depth where there's 5 or 6 levels there. I don't put much stock in that, and the reason why is you can put iceberg orders in, and a lot of big traders manipulate those. They manipulate what the order flow looks like. That's why I don't really believe in level 2 trading at all. But a lot of folks do, and they make a lot of money doing it. So who am I? They're smarter than me. I'm more than willing to say that. I know what I know how to do. And when you guys get further along enough into your career, or if you're already there, you know what you know. And you know what you know. There's a million ways to do this. But as far as what I look at in order flow, I'm just looking at the basics. I'm just looking at real basic stuff. Are we matching orders quickly? But more, not necessarily the level of the buy and the sells, the bids and the asks. I'm not following that as much as just the activity in this DOM. I know when price starts really jamming around and we're getting some good price action, that means the market is liquid and it's on the move. That means that's time for me to trade. I look at this right now, and this is a snooze fest. I could sit here the rest of the day, probably not not get my number. It's not even worth your time. You're better off coming back tomorrow, fresh and ready to rock. But what I'm saying is, that's how I use order flow. This price needs to be moving. Shane, that's volatility. And I go, not really. It's driven by orders, and it all is linked into the process of price discovery. Buyers, sellers, match them up, find a price. And if that debate's hot enough, then that trading DOM should be going like this. And it's not. Let's get a live trading DOM here and see if you can actually see one that's moving. Yeah, I mean, this is a little bit better with the NASDAQ, but honestly, this is really slow for the E-mini NASDAQ. But something like this, it's really slow right now. And the reason why is they're getting ready to drop a bomb on the market. So you definitely want to be careful if you're just an order flow trader. One tip that I would give, though, I mean, if you're trading just order flow and this trading DOM, this depth of market isn't moving, I would definitely cut my leverage, because you're going to get a break. But more along the lines of the market will tighten way up and then break, and then it'll break against you, especially if you're playing support and resistance levels. Now, if you're playing breakouts, nothing wrong with that. Then you almost want to see a slow DOM, and then you get in on the break. Nothing wrong with that at all. Different philosophy. Honestly, guys, I could talk about that stuff all day, but that's how I use it. Let me see. Gold just bounced nicely from a major trend line support. Could you give us your view on what we can expect next? Yeah, I just hit gold, Sangoku. I talked a lot about what the compression was and what I thought could happen. Just a quick review because several of you have asked just really quick. But, yeah, bullish pennant, monthly bullish pennant. You're going to definitely want to be involved on a break. It hasn't broken yet. I'll tell you when it breaks. Tune back in. Maybe something like today. Not the best chart lineup at all. I mean, I really don't like this two-day range in spot gold, but 62% back into the golden zone, 33.21. Pretty good selling opportunity there. But I like my 13-period EMA up there at 33.25. Am I bullish or bearish? I'm neither. This market's absolutely flat. RSI is at 50. I just have no desire to trade that. Like I said, I'll trade gold futures if it gets up to my range. But we're not going to get there today. I'll give it another half hour. Then I'm probably just going to go to the gym after I read the FOMC minutes. That's for sure. Let me see. Hustle, do you even read the chat? Yeah, I'm reading it right now, Hustle. How you doing? Nice to meet you. Pleasure to meet you. Gordon Williams, I'm new here and just beginning, trying to get a schedule to trade FX daily. Yeah, we've got several videos on the YouTube channel, How to Trade Calm. Also, Forex Signals TV. There's a lot of videos there that show you exactly when is the best time to trade. And that's all about, really, it's on you. It's where are you located in the world, which markets do you want to target, and when do you want to trade. There's always a game in town. Remember, all the opens. You got the Asia Pacific Open. You've got the London Open. You've got the U.S. Open. Those are probably the three that I would focus on, and you can just sort of take it from there. Those are spaced out fairly big, I would say. What, about at least 8 hours between. So you should be able to always be trading an open and an active period. If you're a swing trader, you don't have to worry about any of that. You just use longer time frame charts, and you get in there and get going. So good question, Gordon. It depends on where you're located at. So, all right, Hustle Z, do you have a question or are you good? All right, do you think the FOMC will have a big impact to the market? No, not today. Not unless we see a major surprise. There's got to be a major surprise. Major surprise. Let me see. Hot console games. USCAD buy or sell. Okay, we'll cover USCAD. Is it a buy or a sell right now? Well, judging by what I do with the Fibonacci's, and you know what? Let's try one of our other strategies that we put out there. I really do like this. I mean, this is clearly, we're getting into selling, an area where I would be looking to sell. But is it a great area? Not really. This area right up in here, maybe 38%, 137-ish. Do you sell right now? I don't see any reason to do that. But let's try this. Let's go to a different sort of approach. I know I've just sort of stuck to my own views here, and that's because we've had pretty good success over the past several days. Let me see. Yeah, let's go ahead and just open it. Okay, so this is a good look at our 920 EMA. This is the one that's coded. We did some coding for this where it shows you the break. Check out that video, how to code the 920 EMA using AI. You see right there, we had a really great break right there in the 4-hour US dollar Japanese yen chart. So if you're trading the dollar CAD, what would you be looking to do? Well, I mean, right here, this was your buy signal, and it came across the board on the 6th of July right there. So that would have been your bid. So you'd still be theoretically long according to this 920. The 9 crossed over the 20. That was your signal to go long. So what does it mean to take and hold a long with the dollar CAD? Well, it means that we anticipate that crude oil is going to go down. That's not necessarily happening right now. So if crude oil goes down, what typically happens? The Canadian dollar takes it on the chin. That's big. It's commodity dollar. As crude oil goes, what happens? The Canadian dollar goes. Fossil fuels, about 7 to 9% of Canada's exports and their GDP, not their exports, but their GDP. All right, 90-something% of their oil exports and gas exports go to the United States. So you can see with the dollar CAD, I mean, it's all about oil, a little bit about natural gas, but more about oil. As oil goes, the CAD goes. So as oil goes up, this pair should theoretically go down. As oil goes down, this pair should theoretically go up. Not always, but you can see we're in just a real grind here on the 4-hour chart. That's a pretty sweet buy, though. I mean, that's not a bad one at all. If you wanted to hold longs, I don't blame you. None whatsoever. You can see right here, we've got a real situation brewing. We've got a potential on the daily, a 9 crossing over the 20. That sort of signals that, yeah, maybe we are headed much higher. So the U.S. dollar is in a position right now against a lot of these majors to make a move. The real question is will it? This one's a little bit tricky because you're going to have to get help from that crude oil market before you can really get in there and trade this thing with any sort of conviction. And what I mean by conviction is money to get in there and take some real risk. So let's say you were trading this 920. The 9 crossed over the 20, and you went ahead and bought this on a 4-hour chart. Love the 4-hour chart for Forex. I think it's fantastic. Maybe something like this could be your stop loss beneath your signal bar. Typically, I like to take a little bit bigger risk. I would be probably right beneath that swing low, which is right down there, right around 135.81, or you can just put it beneath the weekly low right there and take a shot to the top side of sort of betting that you're going to test market structure, maybe up on this spike right here, something like that. That's roughly a 1-to-1, not quite. You can shoot for the top of this market structure or this liquidity sweep, which is right over here. You can certainly do that, and that could be your trade. Do you want to hold it or sell it? Personally, man, that's a tough one. That's a tough one. That's for sure. All right, guys, let's see. I got a bunch of questions here. I'm going to go ahead and Hustle Z, bro. Your hand movement is like Trump. Trump's hand movement's like me. What are you talking about? Gordon from Dallas, Texas. Good to see you, Gordon. Yeah, so hot console games. I probably would be long console. I don't think I would be selling. But that's just me with this dollar CAD. But I don't necessarily think that we're going to go much of anywhere. So I probably wouldn't be trading the dollar CAD right now. But it's not hey, listen, if you want to sell it, sell it. I have no problem with that. Just let me know how it comes out. Let me see. Team Marina, Shane, what's behind why the broker platforms all show different volume numbers? Where do they derive their volume amounts from? Great question, T. Let me see. Where do I even begin to unpack that? Here's the thing. If you're trading on an OTC market like the Forex, they don't have to report volumes. It's not required. They sort of say, well, here's our volume. They have some reporting requirements, but it's like quarterly. Your broker's got to report. They got to do their quarterlies to still comply with whatever jurisdiction they may be in, which is fine. But the big thing is day to day, minute to minute. Do those volumes really have to be accurate? No, they don't. That's one of the reasons why I trade futures. Take a look at this. This Canadian dollar is a fantastic example. Take a look at the 30-minute chart in your volumes. Okay, we know that volume typically is going to kick up right around 8 a.m. Eastern, and then you're going to get that big rally right there, 7:30 a.m. Okay, that's the open. That's the U.S. Open. So we know, and these are my times. These are mountain times. Eastern, add 2 hours, and wherever you may be, just convert it to GMT, I guess. But this right in here, that shows us that volume's going down. Okay, that's great. That's fine and dandy. But these aren't exactly real. These volumes, yeah, they may be at like sort of a broad trend, but they're not exactly real. So let's go to a futures contract. Now, the difference between a futures contract and a Forex is multifold. Number one, a futures contract is going to go through, what are we trading here for the currencies? Trading Augie, I believe. No, we're not trading Augie. We're trading maybe July. No, we're trading SEPI, trading September. You got to get the right contract or the volumes don't show up. So I believe we're trading the quarterlies, which should be September. Yeah, there we go. Okay, so what do you got here? This is the futures contracts, the 6C futures, which is Canadian dollar. The same thing we just looked at. So what do you have? Okay, you've got 7:30. So that's your opening bell. That's your big spike. And now you're remaining relatively high. Now the difference between this volume and the volume I just showed you on the OTC is what? This has to go through the exchange. These are exchange-based products, which means every time I buy or sell a contract, it goes through my broker, my introductory broker, goes to the exchange, executed at the exchange, then it goes to a clearinghouse. Every one of those trades has a number on it. Every one of those orders has a number on it. It has to be cleared through the exchange, verified through the clearinghouse. Every single one of these trades. Now, it's all automatic. It's all automated now, but the volumes are accurate. So let's say I wanted to go find my bid, my ask, my buy or sell at the exchange in the records. I need the order number, and I could go to the order number and I'd say, okay, show me my trade. I could do that. I'd probably have to get a lawyer to get him to let me look at the records, but theoretically we could do it. In the OTC markets, none of that matters. There is no exchange. You have market makers. It is a market, but you have liquidity providers and a market maker. Those market makers are what? Those are who executes the trade. They match the buyers and the sellers, and they take out a sweet spot in the middle. That's how they make their money. On the exchange, they charge a flat commission. Now, there are still some spreads depending on market liquidity and depth at the exchange, But typically they make their money on commissions. So every time I push the button, it's $5, $6, or $7 or, whatever commission structure I'm in. That's why the volumes are all different. So right there, this is actually what happened with the Canadian dollar on the futures exchange. And you see right here, what are we going to have with this dollar CAD? You can see it's much, much different picture. Shows that steady decline. And the other way, it's sort of plateaued. That's why I trade futures. Let me see, Gigi. Well, I'm kind of new. What do you think about crypto trading? Well, I mean, yeah, there's nothing wrong with crypto. We go over, things like Bitcoin all the time. We've been long Bitcoin for a while now. If you were using the 920 on the 30-minute, you sort of got liquidity swept there, but could have been a big day for you. This is the one that I really liked, though, with this 920, was this daily. There was our daily crossover right back there on the 26th of June, and we were pretty much yelling from the heavens to buy that thing at 367. And since then, we've really flirted with 110. I like crypto trading. I think it's fantastic. There's nothing wrong with it. I would be very careful because of the volatility, trading it leveraged. I'd be very careful with that. I think you could really run into problems applying the leverage to like a Bitcoin USD or an Ether USD. But if you're talking about cash, if you're a cash trader, boy, you can't really beat the daily moves and things, especially, this was sort of my pet for a long time was Shiba Inu. I loved Shiba Inu. I was into Shiba Inu, believe me. And I thought it was pretty good. Made a little bit of money, but didn't make what I needed to make on it. Right back there, 22nd of June, that low, right down to 10 flat in Shiba. Look where my line was. Line in the sand was 10. That's beautiful. That's been up there forever. How did I miss that, right? I got to set my alerts. I need that pine connector, set my alerts. Look at that break. You're going to get the crossover and then the rally. Crossover's brewing. I don't know. It's time to buy Shiba? Could be. But I like crypto. GG or Yee. I'm sorry. Let me see. Which pair of volatility take place today? All the majors. Fabello, all the majors. All the majors will be moving. Hustle Z, how often do you live trading, mate? Can you recommend me any other good pair to trade than the Ox? How often do you live? I trade every day. Hustle. Today I haven't made a trade, but I've got all my numbers lined out. Doesn't look like I'm going to get one. I'm looking at gold futures, though, but we're still about 100 ticks off of that. I'm not going to get that, but every day. So how often do you live trading? Can you recommend me any other good pair to trade? If you're starting Euro USD, tight spreads, there'll be volatility here in about 15 minutes. T Marina, what? Yeah, that's OTC markets versus exchange markets. There's nothing wrong with it. Just I see a lot of folks that are volume traders and they get on the Forex. It's sort of like penny stock volumes. If it's anything you trade on the pink sheet stocks that aren't listed at the exchange, you don't know the volumes. They'll say that they do. Maybe not. Let me see. T Marina, OTC is a scam. No, that's not true, Hustle. OTC, listen, OTC markets, a lot of you guys that are international, you get to trade CFDs. I would love to trade CFDs, stock CFDs. You could take something like the 920 on a daily and go after those stock CFDs and be fantastic. You can leverage your returns. So I disagree completely. I think OTC can be useful. I'm just not sure about volume analysis on the OTC. T Marina, is that the same with B booking where brokers don't send trades to the exchange? If you're trading futures in the United States, there's no B booking. They have to send your orders through. If you're a Forex or OTC trader, the B booking occurs when just the liquidity provider takes your business. The broker says, yeah, we're just going to go ahead and take your trade, and then we'll live with the outcome. We'll either pay you out if you win or debit your account if you lose. I personally don't see much of a problem with B booking. If you're a good trader, you're a good trader. And believe me, if you're a good trader and you're making money, that firm that's B booking you, it won't take them long to say, no, we're sending those through to the market because we don't want to bet against them. So I don't see any problem at all with B booking. I really don't. For a while I did. I said, that's kind of, but B booking isn't. You're still getting filled. You're still getting to trade. So I don't see much of a problem. Musa, how much time is left for the FOMC? It's not a meeting. It's the FOMC Minutes. It's going to be a release. It's not a meeting. We're going to have FOMC live for here in 21 days, and it's up in about 10 minutes. And keep it in-house. Do you do crypto trading too? Yeah. More investing, but yeah. Gold, I already covered gold twice. What do you think about the US 30? Love the US 30 Callistus. I think that this right here was our level. We absolutely loved that level right up there, right around 45,000 in a sell. We just didn't quite get it just yet. I would be sort of bullish, but I think we're going to get a shot up there at 45,000, and I'll be a net seller probably from 45,950. looking for that downside scalp. Interesting that we're still trading inside of Monday's range. Bro, when will the FOMC meeting? It's not an FOMC meeting. It's a minutes, FOMC minutes. They're going to release it. Bull run incoming. Could be Bashir. All right, guys, this is what it's all about today. It's going to be the Fed Watch. The next FOMC meeting is in 21 days, and I'm going to have it for you live. Be sure to tune in. Keep an eye on this channel. I'll cover the presser live. We're not expecting any interest rate moves at all. 93% say that we stay static. What I'm waiting for is September. September, right there, 63.9. We're looking for a rate cut in September, our first of the year. Okay, guys, I'm going to go ahead and sign off. Okay, one more question. What about the S&Ps? We'll get to it tomorrow, Small. Sorry, man. We're out of time. I've been going almost an hour. Sengoku, quick questions about the orb strategy. Do you use it at the U.S. Open time slot or time it with the NYSE? I tried both with varying result. You're going to time it with the NYSE if you're trading stocks. If you're trading stocks, you're going to time it with the NYSE, 9:30 a.m. Eastern. That's when your orb should start. Buy gold. It's going to fly, maybe. What about gold? What about it? Covered it 3 times. You guys will get it. I still want to be net long gold. I don't want to be short unless we see last month's low wash out. What about the S&P? All right, small gamer. I can't resist. We'll do the S&P 500, then I'll call it. All right, S&P 500. What do you have here? June's high. You can see we've traded above that. Very, very bullish here. We're making all-time highs literally every day. It's nice big bullish pennant. I mean, I would be net long if I was a position trader. There really isn't any reason to sell the S&P 500. Would love to buy a pullback here. I don't think that you get it on the daily. If you were going to go maybe down to, let's go to a weekly and see where we're at. Yeah, definitely know this level. If you're going to trade the S&P 500, you want last week's high. Write that level down. Write it down. The high right there is 62.84.5. This is the US 500 CFD. You're going to want to write that down. A potential bullish extension above that zone. And I have to tell you guys that when we're trending as hot as we are, big round numbers are everything. 6,500. Keep a close eye on it. I probably would be bullish until then. Just don't see any reason not to be. We're getting a little consolidation right now at 62.50. My view, we're going to push higher, especially if this is a dovish announcement. That's for sure. All right, everybody. Is it a buy or a sell? Right now? Shane, is it a buy or a sell? If you have a lot of money, you bought it and walked away from it. The big money is going to buy it, and they're going to hold it to 6,500. We don't have that kind of money. Nobody on this stream has that kind of money, including me. That takes a lot of money. Will FOMC make change Bitcoin? No. You won't see much action out of Bitcoin. Bitcoin's going to go up 125,000 by September. That's my guess. All right, guys. I'm out. Thanks for joining me. Great chat today. Great stuff. If you guys have any questions at all, swing by How to Trade. Send me a private message. I'll be sure to get back to you. If you're interested in potentially, other live streams. I know I see a lot of new first-timers. Live stream every day this week. Same time, same channels. Just go ahead and check us out. Okay, everybody. I'm going to go ahead and sign off. FOMC minutes are out here in about 8 minutes from now. Remember, it's going to be a tough release. Markets aren't going to move right away. You got to be very, very, very careful with what you do because it could be very choppy very quickly. Watch the headlines. I'd never say trade the headlines, but watch the headlines. Watch what the media reports. If they come out and they're extremely bearish on this, watch it. If they're hawkish, be careful because it will be a delayed fuse reaction. If you're trading U.S. stocks, it's going to be a hell of a close today. Be careful. Don't get chopped up. All right, everybody. I'm going to go ahead and sign off. Love the stream. Absolutely, Gigi. My pleasure. Okay, guys. You guys have a fantastic session. Absolutely. You're welcome, Lita. Always a pleasure. Always a pleasure, Dave. You guys have a fantastic session. Trade the action well, and we'll talk soon. See you.